For more on the markets, let's bring in Bob Diamond, CEO of Atlas Merchant Capital and former CEO of Barclays. Merchant. You're like involved with trade and stuff, I guess.
I guess it is.
Is it?
No, it's more.
Is it tough right now? Just as far as what sticks in your craw the most, if anything does right now? The way that tariffs are being approached, or just the idea of tariffs at all in general?
Well, there's definitely times for tariffs. They can be an economic tool, right? I often think, like, having lived in the UK for so many years, the UK and Europe have a value-add tax. You know, would you adjust tariffs to, bring in a tax, for example? Or are there times when it's important to protect certain industries in the U.S.? But I think, I think you need kind of consistency to what the
you don't
consistency.
Think there's been that, Bob?
It's been a little bit inconsistent. I think a little bit opaque. So I think people are a little bit confused. But I wouldn't say that there's no value to tariffs when they're part of a plan, and very specifically around trade balance, I would say.
Should we be concerned with trade imbalances when we're a wealthy nation that consumes so much? We're never going to have a surplus. Is that even possible? Where would the dollar have to go for us to have a surplus?
It's such a complicated question for most people. Is it's not necessarily bad, as you say, Joe, that there's a trade imbalance. So if there's a trade imbalance, pick any country, Germany or Ireland, often that surplus there gets invested in U.S. treasuries, U.S. equities. So we have this huge surplus in our capital account, which shows up in the value of our companies, and shows up in the stock market, and shows up in yields. So I think it's not as simple as saying that any one country's trade imbalance is a negative.
Then if you were to use a surgical strategy, which countries need...
A scalpel rather than a chainsaw, is that what you're saying?
Oh, that's good. Yeah, because I've heard that it's a chain. Well, no, Elon's got the chainsaw. The tariffs are.
Maggie Thatcher had a phrase she used, which is ratchet it up, kind of surgical scalpel a bit at a time.
And get to the point where, which countries would you do any reciprocal tariffs? I mean, there are countries that protect their industries.
Yeah, I think those are cases where it can be a very valid trade and economic tool. If someone has, I think the two best examples for me are the one I gave on value-add tax in Europe, in the UK. Another one could be on government subsidize of industries in China, that there might be specific times where it's to balance, make it a more equal trade. And I think what we've seen situations where tariffs are being used for non-economic or non-trade reasons, around border security, for example.
Yeah, fentanyl.
It's a tool that is not based on balance of trade
But you can do it because you can claim the emergency power to be able to levy those. Would you be trying to change the USMCA? I mean, I think that could be in the back of this administration's, even though Trump negotiated in his first term, the USMCA. Are there issues that should be corrected, and that this could be a prelude to?
Listen, I think there's only this economy is so resilient. I am so bullish on kind of the U.S. economy.
You are.
I think there's a couple of dark clouds out there. We've talked about this before. I think the debt levels are a bit of a cloud, and I think the inconsistency right now around tariffs is having an impact on the markets. But, we've seen it over the last 6 or 7 years, or since the beginning of COVID. The resilience of the U.S. economy is incredible.
You don't see us falling into recession from this, and you don't see the market 20% down, 30% down. You don't see anything like that. You must think we're already getting close to stabilizing, unless it gets worse.
Here's a prediction. There will be a recession.
Right. There will be a recession.
There will be someday. It's a cycle, right? That's why they call it a cycle. But I think if you look at this year and next year, the numbers that are coming out on the labor market are fine. The numbers that have come out on inflation are like, high 2s, maybe low threes.
Credit's
it's not
good.
exactly the target, but
Credit spreads, yeah.
I don't think the Fed's going to overreact to 3% inflation.
Although we played a soundbite earlier today from Jamie Dimon, who made comments at a BlackRock conference yesterday. I think it was BlackRock, where he was just saying things had slowed down. And we've seen this. If you listen to Target, if you listen to Walmart,
yeah.
if you listen to McDonald's, on the low end, they've seen a slowdown. In the middle range, they've seen a slowdown. In the high end, they've seen a bit of a slowdown. Is that anything to be concerned about at this point?
Listen, if you ask me compared to 6 months ago or a year ago, do I think the chances for a recession or a slowdown are higher? I think they are, but kind of not dramatically higher.
So less
if you look
than
at the
30%,
balance sheet of the personal sector, the balance sheets of corporations, do you see like excessive risk or excessive debt? I don't. Yeah. So I think for this year and next, it's not clear to me unless there's new impacts coming in.
I mean, it could be a corporate recession to some extent, just if you're looking at stock prices. If you have Delta and others warning it's not going to be as great as it's been, maybe margins get hit. But you're not talking about a shrinking economy that puts us to that position.
I don't see anything right now that suggests that, other than, as I said, the warning signs, which I think warning signs on the consistency of the implementation of tariffs. And I think the debt levels, we've talked about this before, that is a real dark cloud. It's not impacting us right now because kind of rates are going down, so we can fund the deficit. But the debt level is too high, and it's going to be an issue in the medium to long term. But I don't see it this year, no.
Oh. You're not triggered at all. You're in a really good place, which is good to see. It makes me happy.
Well, we invest in private companies, and that makes it nice, too. We don't have the volatility of the stock market.
In general?
Yeah.
Good.